I think you realize that if you would have bought around 300 to 400 days before the halving and held for an equal amount, you really captured most of kind of the bull market periods. And crypto or Bitcoin itself went through a bull market in 2011, in 2013, in 2017, and in 2021. But the key factor is how do you kind of like capture the entry and the exit timing.
For more in the markets action, let's bring in Matrixport Head of Research and Strategy, Markus Thielen. Markus, Bitcoin is back above $50,000 this morning. We saw a dip for a bit right after the approvals in January, but it's rebounded since. What's behind this recent rally?
Yeah, obviously everybody's focusing on the halving. Everybody's, positively surprised about the inflows that we're seeing in the ETFs. But again, we made various arguments that historically, if you would have bought Bitcoin around Chinese New Year, which we're just having right now, on average, you would have made 11% return. And since 2015, you would have made money every year, basically. So this statistic, is proven correct again. And plus, we are in a US presidential year, and Bitcoin on average rises 192%. If you take the average from 2012, 2016, and 2020, so it's a very bullish scenario right now.
I want to ask you about crypto companies' earnings since we had DCG earlier this week and Coinbase is reporting tomorrow after the bell. Is that something that's on your radar at all when you watch markets?
Well, I think this earnings report is again a bit backward looking. This is the Q4 earnings report. Bitcoin was materially lower, for example. Trading activity was, significantly lower. So of course, things have changed really in Q1 this year, and people looking into, Q2 and really judging not necessarily what corporate management is saying about last quarter, but more about the future. And the question is, the question was actually last year, have these companies, cut enough cost? Have they become lean enough? But this year is all about expansion. So I think the earnings itself might not be that important. But of course, people are looking for kind of clues what management is seeing in terms of trading activity. But nevertheless, I think the Bitcoin market is in a new bull market. I think we're seeing strong demand, and it might not necessarily be reflected in corporate earnings, but we're definitely seeing this in the flows. So and the flows are very bullish right now.
So speaking of earnings, another company that reported earnings last week was MicroStrategy. And of course, the reports are usually about numbers, but there's typically a lot of more information that's being talked about in the reports and in the presentations. And one thing that MicroStrategy mentioned in their report last week is that they're sort of rebranding to a crypto development company, or rather a Bitcoin development company. What do you make of that?
Well, I guess it's another marketing story ahead of probably another share sale. So I think what's quite interesting is since 2020, MicroStrategy has actually increased the outstanding shares by 40% from, around like 9 million to kind of 12, 13 million now. And I think the interesting aspect is every time when MicroStrategy as a stock was overvalued, compared to the price of Bitcoin, that actually MicroStrategy issued more shares. So what does this mean? If we run a regression analysis, the share price versus the price of Bitcoin, we can identify right now MicroStrategy is 20% overvalued versus the price of Bitcoin. And end of December, we came out with also like a similar analysis that was covered by Coinbase, print media basically. And back then we said MicroStrategy, the share price is 26% overvalued, and of course the shares dropped from 700 to 500, but now they have rallied again from 500 to 700. And it's interesting that we have seen in November and in December, when the share price was overvalued, MicroStrategy issuing more shares and of course subsequently buying more Bitcoin. In January, we have not seen this. Why? Well, because the share price dropped actually below the fair value based on our regression model, and therefore MicroStrategy didn't do anything. But now the share price is again overvalued, so we assume MicroStrategy is going to issue more shares and subsequently buy more Bitcoin and get more levered up into the halving period.
So how does this overvaluation happen?
Yes, very interesting question. So you're a traditional stock investor. How do you trade, the Bitcoin ETF kind of news, right? If you're like in Q4, you don't have many vehicles yet, but of course, in the run up to the ETF approval, MicroStrategy share price have outperformed a lot because people needed to get exposure, and normal equity investors, they cannot suddenly buy, Bitcoin through various crypto exchanges. They have to stay within their universe of equities, basically. And this is how MicroStrategy has become overvalued. And of course, here again, right, people look for more leverage into the cycle. We know that MicroStrategy has taken on debt to really gear up a little bit. It's not really that large, but when you look how in November and in December, they kind of issued around 5% additional shares, so which is quite actually a lot. But I think here it's kind of like investors, they want to get exposure. And again, not every investor can buy, Bitcoin spot or Bitcoin futures. So they have to stay within the equity universe. And if you want to, trade this halving cycle, for example, or halving period, you just buy either mining stocks or you buy something that is sort of like a proxy ETF, which is MicroStrategy.
So let's talk about the halving for a little longer because it's obviously a huge deal in markets right now. What do you expect the immediate and long term price reaction for Bitcoin to be?
Well, I think we kind of rally into this halving because everybody gets, geared up. Of course, Bitcoin has reclaimed the 1 trillion, market cap, which is of course, a massive number. But I think when you run really kind of like the bands around the halving, I think you realize that if you would have bought around 300 to 400 days before the halving and held for an equal amount, you really captured most of kind of the bull market periods. And crypto or Bitcoin itself went through a bull market in 2011, in 2013, in 2017, and in 2021. But the key factor is how do you kind of like capture the entry and the exit timing. And the entry and exit timing is around 300 to 400 days, again, before the halving as well as after the halving. So what the halving actually indicates, it of course indicates there is, less Bitcoin being mined. And historically, what we have seen is actually that miners restricting the flow onto exchanges. So basically, they're kind of like little, I guess, reverse cornering the market. And that has caused the Bitcoin price to go up. But I think the interesting aspect is really, I think what's more critical here is that it indicates this bull market might last another 12 to 18 months, and I think this is quite significant. But of course, last week we also saw that 1.2 billion US dollars was bought in these Bitcoin ETFs versus around 300 million US dollars were just mined, through the miners. So there's a large imbalance happening right now. And of course, after the halving, this imbalance is going to even get more perverse because only half of those Bitcoins going to get mined because the reward's going to be cut in half. Well, but if the demand still continues for these ETFs, then of course you get this parabolic move upwards. And I think that's what everybody is looking for. And I think this is why we really an interesting period now, because we never had this where traditional investors were buying Bitcoin, but these traditional investors have actually large amount of capital available. This was never before there.
So, Marcus, speaking of ETFs, on this show, we've been hearing analysts looking at the potential of a spot Ether ETF as a catalyst for some of ETH's price action earlier this year. Today, your team at 10x Research released a note laying out some of the signals that you've been seeing regarding the price of ETH. Can you elaborate on that?
Yeah, so we run, various trading systems, and, they look for pattern analysis. When we had like a similar, setup, what's the probability that we're going to rally further? And, something that we have identified in various reports is of course, this technical level of 2,500 and then the next one at 2,750. And we're kind of like struggling with this level right now. And it's very interesting because it's sort of like, the Fibonacci retracement from the bull market peak. And of course, keeping in mind that the bull market really peaked when US interest rates bottomed and reversed. And I think right now we're looking actually that US interest rates are going to be lower this year. So the picture is completely opposite. But if this level of 2,750 breaks, which based on our models and our trading, signals indicates, then I think we can probably see a relatively quick move to 3,400. So we're really quite bullish. But I think, it's not that we always like wildly bullish, but I think this time, the lights and the analysis is really, pointing towards, a strong rally. And I think it really fits in perfectly, exactly as you said, if these ETFs also gain traction for Ethereum, which it seems, quite likely because, the SEC probably, made a good decision here that Bitcoin ETFs will be traded. So far, there has been no problem, on the operation side, valuation or anything. So this is really like a smooth operation. And I think this is going to give the SEC a lot of confidence that also the same operational setup is going to work for Ethereum. And I think this is why it's very likely that we're going to get an Ethereum ETF. And I think this is why Ethereum probably is going to rally further this year.
So just going back to Bitcoin for a second again, as we are at $50,000. When you joined us in early January, you were projecting Bitcoin at $80,000 at the end of the year. Last week, that projection was moved to $70,000. What changed your mind? And I mean, we are at $50,000 right now. So is this the time to sell or should investors hold?
Yeah, very interesting, example here. So in October 2022, we came out with a report that this is the time of the mid-halving low when Bitcoin was trading around 20,000, and our analysis indicated that at the halving we would be at 63,000. So this, of course, was massive projection, but I think at 50,000 we are like relatively close with 2 months to go until the halving. And then to answer your question really is, why did we change our mind in terms of like accelerating really this move to 70,000? Well, last year on February 1st we came out with our 2023 Bitcoin prediction, and this was based on our January signal or January effect analysis, which Bitcoin was just trading at 22,000, but based on the January effect we projected it might end up at 45,000 by December. And of course we were at 44,000, so we're very, very close. But this year our January effect model is just predicting a bullish scenario, as I was just saying, because of the presidential election and other factors. But because of the January performance was relatively mediocre, right? We were just barely up. Our model predicts we might be only rallying to 70,000. Of course, 70,000 could be quite reachable if we get a move, but it's a conservative model in the sense, but it's just based on the January effect. And again, last year it was really spot on, and this year we are confident that we can at least reach 70,000.
All right, Marcus, thanks so much for joining us today.
Thanks for having me.
That was Markus Thielen, Matrixport Head of Research and Strategy. Thanks for joining us. And that's it for today's show.